Hello and welcome back to the VUCA Insights podcast, where we bring you insights into the world of investing, entrepreneurship, and growth mindset. Today we have a returning guest, and when people are returning to the podcast, means they're really really good. I call him a friend, and he's dialing in all the way from London. It's he told me it's apparently a very typical English summer where it's raining and wet and at 18 degrees, where in Malaysia we are experiencing 33 and 34 degrees, which he will explain in the podcast today why it impacts investing as well. So we have none other than Leoniv Mironov, founder of LM Commodities Research and currently with PACAT Capital Management Limited based out of Hong Kong. Leonid, or Leo as I called you, thank you so much for coming again on the show.
John, thanks for having me again. Super psyched to be here. Very excited for the topic we're about to discuss.
Yeah, that's right. It's good. So in the last, we talked about an oil that we'd actually extract from the ground, but now we're going to talk about oil that we actually grow. So today, we're going to talk about palm oil and why Leo is so good at it, because his specialty is actually in energies, commodities market ranging from oil and gas to oil seeds, including palm oil, which will be the focus of our discussion today. So we're going to start out with something a little bit more broad-based. In terms of palm oil as a vegetable oil, Leo, can you briefly tell the audience what is the significance of palm oil in the global oil seed industry? Is it something very important or something like tiny weeny?
I think people really underappreciate just how important palm oil is, right? I mean, it's by far, in a way, the world's biggest source of oil because, people say that it's easy to sub out palm oil in cooking and we can use like rapeseed or sunflower or whatever. Sure, in theory, one particular person can, but people all over the world cannot, right? I mean, between the crude palm oil and the palm kernel oil, the oil that comes out of the kernels, palm oil is almost half of overall seed oil production in the world, right? I mean, 48.5%, right? It's an insane amount, right? I mean, it goes into everything, right? From cooking to chemical products, right? I mean, it's super useful, and I think a lot of people underappreciate just how ubiquitous it is in the modern world.
Great. I mean, every time, especially as Malaysians or Asians, what we only see is always the headlines of, palm oil is raping our virgin forest, palm oil, all this kind of bad press and whatsoever. But in terms of efficiency as an oil seed, how good is it comparatively to the alternatives like rapeseed oil, soybean, soy oil and all that? I mean, in terms of efficiency, how efficient is it as a plant? Oil.
Look, I think it's really important to make a distinction. Why are people unhappy about palm oil, right? And there are reasons, right? I think on the cooking side, a lot of people complain that it's not the same as butter, like margarine based on palm oil is in some way inferior to some other ones. But it's not inferior, it's just different from what you're used to. And then people tend to overreact. But I think on the farming side, the problem with palm oil is not that it does anything terrible, right? I mean, it's not like you put down a palm oil plant, and sudden everything turns gray around it and like it eats up stuff. No, the problem is human behavior around palm oil, right? It's the fact that you chop down jungle, right, and forest with established biosystems and replace it with these palm oil plantations. They do not support biodiversity in quite the same way as the jungle would have done that was there, or jungle or developed forest that was there before, right? So the problem is that of management rather than the substance, right? But the reason why people do without palm oil is because you cannot get yields anywhere near as high from other types of oils or other plants that generate other oils and palm oil, right? And palm oil, you can generate between 3.5 to 4 tons a hectare of oil, all right, and including kernel oil processing, right? Whereas the next best thing is rapeseed, and that's 0.7, right? And so it's more than a fourfold difference in yield per hectare, right? And again, coming back to just how big and how important palm oil is, there is absolutely no way you can replace it. Nothing comes close, right? The only other oil that is as big, well, not as big, but could potentially be as big and is reasonably sized is obviously soybean oil. that because of the lower yields associated with it, right? And there is a reason why it grows in places like Brazil and America, right? I mean, it does still require lots of land and lots of water management to produce it. So if you're looking at actual alternatives to palm oil, there aren't any really. The combination of foods and weather and land management that's required is pretty unique, right?
Yeah, I mean, when I was just doing some basic research on it, I was a bit blown away, Leoniv. I mean, in terms of efficiency, in terms of whole use, because even the husk, after all you've extracted all the oil, is actually used as biomass for self-sustaining energy on the mill, and it's like there's no part of it
see,
goes unweighed.
if people you're looking at do that, they're excellent operators. Not everybody does that, right?
Oh yeah, true.
But many people don't.
Yeah, exactly. I mean, we'll talk about this company later. A company I really admire, the Bax family of UP. Yeah, so we'll talk about it when we come into that part. But still trying to stay at the 50,000 feet view. Okay, so who are the players? And maybe can you broadly categorize the value chain of this industry? So do we start like at the upstream? So maybe you can just give the categorization of the industry as a whole in terms of a value chain.
Let's do it because palm oil is a global business. Although 85% of palm oil comes from Malaysia and Indonesia, it's still grown all over the world, right? In the right belt, and so like Africa, Ecuador, Colombia, right? I mean, all these places still grow. So just conceptually, right? Think about what needs to happen to grow palm oil, right? I mean, you need some land. Of course,
yes.
Come first. Then once you've secured yourself some land, you start planting the trees, right? And then as you move from if you just have the land, you're the landowner. If you start putting trees into the ground, you become a plantator, right? And then you start collecting the fresh fruit bunches, and you can either then sell them as fruit bunches, or you can refine them yourself. So you can put down at the end of your plantation and take the bunches, press them there, right? And then extract the types of oil. And then you're the processor, or refiner if you prefer. And then if you choose to put that oil into a bottle with your own brand on that bottle, it becomes integrated into the retail and the consumer end, right? And in this conceptual scenario, obviously you retain control of your fruit all the way through oil. And of course, you can use counterparties in the process that can either help you with any particular part of that journey, or they can buy stuff from you immediately right there and ship it to other people who concentrate on doing just that one thing. So there is there are companies that focus on just milling, or companies that focus on just making the oil and marketable, right? I mean, putting those brands on that oil, right? And it's overall, as you would expect for something so important, it's a thriving global market that enables people to focus and concentrate on things they do well, all the while also allowing fully integrated players to exist.
Yeah, so great. I love that take through in a way, rather than thinking of it as segments, you just take through virtually the life of a palm oil from a sapling all the way down to a bottle. And you've been in Malaysia, and I'm pretty sure you may know some of these brands like Eagle Oil and all that. So for consumers, we just look at it as a 5-liter bottle or a 1-liter plastic white bottle. So Leo just described this whole process, and like what Leo said, it's either you take up the whole chain, it means you're an integrated player, or you choose to outsource certain parts of it and they become very good at their niche. Okay, so if someone becomes an integrated player, like what you just described, that means they have ownership of the value chain entirely, all the way from the sapling all the way until being bottled. What are the advantages and disadvantages of being the integrated player versus being a specialist? That means you remain either a planter or a miller or just a refiner.
I think it's not too dissimilar from any other industry in the world, where the benefits of specialization are getting good at it and driving the cost dramatically, right? And then the benefits of generalization is the ability to control costs, right? So you integrate it vertically, right? As you and the saplings, like you say, or the fruits, you are any volatility on the cost side, the inputs, right? And the inputs aren't a very significant part of the overall cost curve. If you're fully integrated, you're able to fully control the cost of input and figure out where you want profit to accrue, right? I mean, do you want which business do you want to be profitable? So really work with. You can really work with things like tax advantages, global asset ownership, right? So as you own the chain, right, you can figure out, like, for example, there is a policy for an incentivization of production, say in Ecuador, right? And as a global vertically integrated player, you go and see, okay, well, they can actually produce tax-free in Ecuador. So you yeah, and on that production side, so that you don't have to pay tax, right? And then your milling facility, say in Malaysia, then pays over the market rate for the products of Ecuador, right? And for example, this is obviously a generic example, because most people aren't globally integrated. Most integration happens domestically. But even then, right, you can figure out, like any other form of capital allocation, right? I mean, where are you getting the bang for your buck? Where are you getting the biggest opportunity to retain earnings, right? And that tends to vary over time. But then you can think, what about investor preference? What do they pay for, right? And then you see, well, consumer businesses tend to have higher multiples than commodity production indices. So as a vertically integrated player, you're in a position to effectively subsidize your consumer business by effectively transfer pricing your way through the chain and saying, look, we have this wonderful consumer business that is fully protected on the cost side, but there's also a premium brand domestically. We've invested this money in marketing, and everybody knows it's like we control a market share, and then we can demand like 30, 40 times earnings valuations from the market. And whereas when you are just a producer, it's very hard to talk about those valuations, right? I mean, but hard.
Yeah, and also as let's say upstream producer, you're at the mercy of the volatility of just the crude palm oil prices, where you may need to hedge. I mean, maybe just an additional question to that. In terms of government policies for integrated players versus a specific, because, like, for example, do correct me if I'm wrong, but if I recall, the Malaysian government has like a cap on how many mills you can build based on the size of your plantation size and all that. So I mean, like, maybe you can, for the audience's benefit, do you know the numbers off your head?
No, I don't remember them from the top of my head, but I think that the way to think about policy on this matter, and you know, government policy in general, to be honest with you, is A, it will change whenever it suits them, and B, you got to understand what it is that the government is trying to promote. And in Malaysia's case, there's make sure that nobody is too dominant, right? And that there is for an independent milling operation that people can go to, right? And they bring their excesses to, because you want to create a marketplace at every level, right? Because if you do, you then, as a government, you then have an approach to realizing where transfer pricing occurs. And if it's too egregious, you can go ahead and clamp down on it and say, look, the market pricing for like third-party volumes on the mills is whatever, 3,000 ringgit, but you're actually sending oil through your system at 900. You're like, obviously that's not going to fly, right? And so please figure it out, otherwise we will, right? And
yeah, exactly. We will step in.
Yeah, and you got to be on the same page with the government, because I think Malaysian government is actually very good at regulating palm oil, right? I mean, Compared to Indonesia, I think Malaysians have done a pretty good job, right? And I think I mentioned to you this to you before that Malaysian government gets lots of stick for things like the chicken thing last year, right? And moving sort of with the times, but actually on the palm oil front, they have a vision of the industry that they want, which is competitive and competitive at every level, right? I mean, so there's planters, there's competition between millers, and there's competition on the end product side, right? All the while enabling domestic champions, i.e., so you can actually build out fully integrated players domestically, and once they're up above a certain threshold, they will also receive personal treatment from the ministry, right? I mean, they can then have a relationship with them, and you know, they keep each other abreast. And in effect, the ministry is a partner, live domestically, right? And so as a result, in Malaysia, you're unlikely to be hit with unexpected fines or unexpected changes to legislation, like in Indonesia, for example. Again, last year, Indonesia had this big ban on palm oil exports, and then subsequently a form of price controls, right? And you're like, okay, not great, right? Okay, there's actually price controls. That's probably not the right way of saying it, but actually, they've introduced an extra tax that the producers were not allowed to pass on to consumers, right? And I mean, it's clunky. It's not particularly good for anyone in the value chain. It does offer immediate the players, but to the consumers, sorry, but longer term they'll have to pay for it because this damages the Indonesian value chain's access to the capital markets, right? And we can expect higher prices in Indonesia over the longer term. But of course, people don't think about the longer term when there is a chance of a calorie shortage in the immediate, right? And if you're dealing with food security issues, kind of this long-term thinking tends not to be at the front, right, of everybody's thinking. Let's solve it right now. So again, full marks to Malaysian regulators for not doing it, and as most regulators find, not getting involved in these processes actually pays off in the longer run. And I feel like Malaysian guys do take this approach of we kind of let people do whatever they want to do unless they really want to push the envelope, at which point we come in and explain to them what it is that we don't like and give them time to change whatever it is that they're doing.
Yeah, I think there's a word for it, laissez-faire, or you just allow market. Yeah, and laissez-faire. Yeah, see, I'm obviously not an economics grad, but yeah, I think hopefully someone from MPOB is listening, and then they get a pat on the back, you know. And you know, we had a very fiery minister.
I also want to say thank you for the wonderful data management that they do, right? I mean, the polls that they do. Again, I cannot say enough good things, right? I mean, they've done a phenomenal. They should take their hat off. Well done, right? And
yeah. I mean, just go to MPOB website. For those of you who are palm oil investors, you just go to MPOB website. You'll be amazed what kind of data you can actually get out of it. Actually, yeah. We actually had a very famous palm oil we call it, I think, primary industries minister, and he used to be. For me, as I remember him as a teenager, he was quite fiery. Tan Sri Lim Keng Yek. We call him the palm oil father of Malaysia. I don't know if you've heard about him before.
I only read about it. Only read about him.
Yeah. Okay. So coming back to now at 50,000. Now let's go down a little bit to about 40,000 feet. And you just gave us quite a good overview on the value chain. So I do want to touch a little bit about who are the main players in this global industry. Obviously, there are some very dominant integrated players. Obviously, there's also very specialized niche players. But maybe can you throw us some names and maybe their role in this global industry, actually?
Well, I think it's very important for, again, Malaysians to understand that you're actually at the forefront of the industry, right? I mean, as you would expect, right? I mean, again, I mentioned this before, Indonesia and Malaysia account for 85% of global palm oil production, so it's only natural. But nevertheless, right? You're the absolute best place in the world to produce the stuff, so it's not surprising that local companies do so well. But it's all the actually, maybe some people don't know, but like a lot of malls in Kuala Lumpur are actually built by plantation companies on
Correct.
station. So like IOI and KL, Kepong, they all engaged in palm oil production a lot closer to the city, right, back in the day. But now obviously they've moved out. But what's left is their branding all over the shop, right? And then these
That's
are
right.
the big Sime Darby, IOI, KL, right? I mean, obviously, SOP, Sarawak oil palms, like the people that I really appreciate, and Hap Sang Tan, all these guys, right? I mean, it's
Yes.
lots and lots of small and medium-sized and large players out there in Malaysia. But the company that kind of sort of stands by itself in this conversation is, of course, Wilmar, right? I mean, Wilmar is the big Singapore listed. I think that's what we'll say about them. Singapore listed, but effectively a global player, the only true global player in the industry, right? I mean, Wilmar is big in China. Wilmar is big in India. Wilmar is fully integrated from owning land to growing their own saplings, to growing their own fruit, milling their own fruit, packaging their own oil, selling it to the consumer. The whole shebang, right? And
yeah, that's right.
it is, of course, the standout operator in terms of size, quality, and depth, as it were, of business, right? I mean, I'm a bit iffy with my consumer branding in Malaysia in particular, right? I mean, but I think most of these companies, even if your listeners haven't heard of them, they definitely have seen the products, right? I mean,
Yes.
Most of the oil you buy on a daily basis probably comes from the company that I've just mentioned.
That's right.
One of
That's
the companies,
right. Yeah. So you said there were two dominant players. One is Wilmar. Who's the other one?
And I said Wilmar stands by itself, right? I mean, that's the
Okay.
biggest global dominant player, and the two players are, of course, Malaysia and Indonesia. Was what I was talking about, like on the country.
Understood.
But
okay.
Market values of these things, right? I mean, just for illustration purposes, right? The big three in Kuala Lumpur, Sime Darby, IOI, and KL Kepong, they put together are a little bit less than what Wilmar is on its own, right? I mean, so Wilmar is about 19 to 20 billion US, and the three big Malaysian ones are about 5 to 6 billion each, right? So, so for indication of scope, right? And then there is a bit that is below that, and like your Felders and Gentangs, right? I mean, they're smaller still.
The small guys. So even lower would be guys like Trade Winds and Price and all that. They're small compared to the.
They're really small then, right? I mean. So and then you're looking at this and like the total market cap of all listed. I have a $250 million cutoff point. So
anything below 250 is cannot.
yeah. But even then, right? I mean, if you take everything who is above 250, that's about almost 20 billion on the dot US, right? And Wilmar alone is 19.5. So just for comparison purposes, right? I mean, that's not all. I mean, obviously, in terms of output, the gap is much smaller, right? I mean, there's all sorts of, mitigating factors, as it were. But just for people to understand conceptually, if you want to look at the palm oil industry and if you want to limit yourself to one company, that's Wilmar, right? I mean, that's...
okay, great. I do want to talk a little bit about the traders that may not own the value chain, but they actually own or they how they are part of the value chain is they're like traders. Like for example, how do people like the ABCDs, like the Louis Dreyfus, the Cargills, the Archer Daniel Midlands? Because like for example, Wilmar, I have fantastic respect for the company. I did a brief research over them. Second largest shareholder, ADM. I think in my thought process, I'm like thinking, if you can't beat them, join them, right? Kind of thing.
Well,
Is that
Um, I mean, let's take a step back a little bit. In oil and gas space, right? You are dealing with traders to almost to the same degree, if not more, than in the agriculture space. But in the oil and gas space, the upstream asset owners are massive companies, right? Whereas in the agricultural space, upstream asset owners tend not to be, right? And palm oil is actually, you do not tend to be in an industry that is super consolidated, right? I mean, you actually have a lot of smallholders, farmers, and smaller enterprises all over the world, right? Who cultivate the land, right? And that's just how it's been for a long time, right? And we're not at the stage yet where everything is incorporated and everything is large, right? So in this industry, the relative power of the trader is higher than it is in many others because of the market structure of the production assets, right? And because lots of smaller operators, right? Now in palm oil, it is somewhat different because of the greater consolidation of the industry, because of the presence of companies like Wilmar, like Shine Darby, like IOI, who are large and in their own right strong players. But nevertheless, the funding that Louis Dreyfus has access to, for example, right? I mean, the trade terms that Cargill can give you, right? These are unmatched by any one of these guys except maybe Wilmar, right? So sudden you are at a disadvantage almost if you're not like a trading house in terms of what you can offer to a farmer, right? So for example, for access to third-party volumes, these trading guys can come in and really push you around. Whereas, of course, on the milling side, on the processing side, on the end product production side, it's only a guy like Cargill who can give you certainty of supply, right? And if you go to Cargill, like, buddy, I need 50,000 tons monthly, like, I don't care about weather, I don't care about growing. This is why I'm not in the growing business, you see, because I only want to process, and I am desperate to have 50,000 tons come in every month, right? And if somebody, just a plantator on his own, is like, well, I can give you 75 in the summer, but only 30 in the winter, right? Or like, you know, like, actually, well, I can maybe give you 45, but I promised 5,000 to this guy down the road from here, and you know, there is some stealing going on, and you know, and then there is some, you know, some fruit rots away. There are some other issues here and there. Okay, I'll try and ship you 50, but you know, don't hold me to it. That's not acceptable. Industrial processor, right? And of course, I exaggerate for effect, but you know what I mean, right? I mean, if you're dealing with the likes of Cargill, right? I mean, you are the certainty and the security that it gives you on both ends. You pay for it in price, right? So you pay them the premium for their services, and you accept a lower bid from them because, again, of the certainty of the fact that they will offtake from you, right? And that is that to be is the biggest driver for their success in the industry, right? But of course, in some other industries, they're able to integrate all the way through to production assets, right? And in palm oil, independent producers are still dominating.
Great. So we're gonna go a little bit more granular now. Thank you again for serening. You know, I think that principle about thinking about consolidation of power and size between two differing industries like oil and gas versus that of palm oil, I think that was a very good insight. I guess let's look at a little bit more granular in terms of if they were to specialize, if it was a planter, what would be the biggest cost factor or the biggest risk that a planter, very specialized planter, would be worried about that he has to hedge his risk?
Well, I think the biggest source of uncertainty for every agricultural producer, including palm oil planters, is of course the weather, right? And you cannot legislate for it. You cannot tell it to stop. You cannot pay it off, right? I mean,
unless you're God. Unless you're God, right?
If you are God, why would you bother with palm oil? You know, it's one of those. So it's one of those where you are beholden to it in a way that you didn't fully appreciate, because normalized, everything is fine, right? I mean, when you smooth everything out on the curve, it's like, okay, it's a better year, it's a worse year, but those bad years can get really, really bad, and those good years are never good enough, right? And the operational challenges of running an agricultural business in an environment of highly changing weather patterns, I don't think we can overstate just how complicated and challenging it is. Too much rain, no good. Not enough rain, really not good, right? I mean, too much rain, okay, we can. It stresses everybody everywhere, right? Because a lot of these operations aren't mechanized, right? We're dealing with actual people with knives, climbing up trees, chopping down these bunches, throwing them in the trucks. If it's too hot, they're not as productive. You have to think about health benefits and things like that, right? Like, this sound quite trivial. I think a lot of investors in particular look at the Excel side of things. Well, the pricing is going up, it's great, right? Yeah, but operationally, right? I mean, pricing is going up for a reason, and that reason is it's really difficult, right? And then, so I think my number one concern as a plant of palm oil is access to water, right? And that that the ground that I own is productive and fertile enough, which I think in Indonesia and Malaysia you can kind of assume. But then the point number two is making sure I have access to water in the dry season, right? And I have adequate water management in place that I don't get flooded too badly in case the rain excesses happen. So something that we have to absolutely talk about is this La Nina phenomenon and El Nino that we're seeing a flip literally right now, and as a result, you're having the really hot weather and low rainfall in Malaysia, right? But not just Malaysia, right? The entirety of Asia will be suffering with less rainfall and hotter weather. In this environment, the crops are likely to not perform quite as well, right? I mean, if you look at the past four El Ninos, you will see that the average drop in Malaysian output is about 13%, 13 to 15%, but the increase in price is about 30 to 60%. Now again, I mean, that's obviously a big gap, but like the lowest it's been was like 30, and normally it's like trending up to 50 to 60% over the course of the event, right? And why is that? Well, that's because in Malaysia, water access is slightly better, right? And Borneo is quite good for water access, right? I mean, so places like Sabah and Sarawak, right? I mean, it's okay, it's fine, right? I mean, you can probably manage. But in some other parts of both Malaysia and Indonesia, but also in places like Cote d'Ivoire, but also in Latin America, right? All of a sudden, you're dealing with much tighter water access, right? And providing that water flow in a drought-like environment becomes much more complicated, right? And that the way that the world works, right? And so in that sense, it's good to be in Malaysia during times like these, assuming that it's normal, right? And obviously, the stronger the effect of the El Nino, the more it impacts everything, right? And there is a tipping point for every location, including Borneo, right? I mean, the droughts get really, really bad, then all of a sudden we might be dealing with a point where production drop-off will be even more significant. But it still tends to be outpaced by the price increase, yeah.
Yeah. In terms of like you mentioned very interestingly about the 4 cycles, right? The 4 cycles happen over a period of how many years actually in between?
Well, the full cycle is 2 to 4 years, right?
Okay.
So that is going away now, lasted for 4 years. And this coming El Nino, who knows, right? We don't know how severe it's going to be, and we don't know how long it's going to last, but probably 2 to 4 years overall. I would say that in investment research and advice circles, it's poor form to say invest based on weather, right? I mean, it's like you don't know the weather; it's unpredictable. Like we make all these jokes about meteorologists not being able to get it right.
Yeah.
How can you possibly be basing your investment decisions based on that? And I say, yeah, absolutely. Right. I mean, it's tough to predict, and maybe it's not going to be as severe. Maybe it's not going to have the impact. All true. All we're saying is be aware, because this thing has the potential to really tighten the screws on supply, right? At the time when you might not expect, right? And also because um, because the markets are much more interconnected now than they ever were, right? So, for example, India is very actively trading the spread between soybean oil and palm oil, right? So, then they would buy more soybean if that makes sense, or more palm oil if that makes more sense, or depending on the spread that they're getting, right? That mechanism globalizes the market for edible oils, and effectively, you're not just looking to also consider what's happening in the soybean trade, right? I mean, are the soybean guys able to step in and fill the gap that will be left by underproduced palm oil, right? So it's not just what are the yields like on the palm oil side, it's also what are the other guys doing. Now, on top of that, you put clean biodiesel mandates, right? So, you know, in Malaysia and Indonesia, you have a minimum amount of bio-sourced diesel that you have to mix in. To your fuel, right? In Malaysia, we were moving up to 50% in Malaysia by 2028, I want to say, and the 50% in Malaysia by 2030. I think that's the current run rate. But obviously, these are moving targets, right? I mean, it's whatever. The point being that already at this point in time, we will have about 7% of overall palm oil go towards biofuel, and probably going to be a quarter eventually, right? I mean, it's a thing that's already happening, but it's also true for corn. It's also true for soybean, right? I mean, it's also true for rapeseed, right? I mean, this creates a really weird, effectively oil-based. If you think about like almost a relative value market, right, for all these various sources of biodiesel, and all of it, there is a chunk of a market that is actually not linked to the agricultural sector, but the pricing of it is actually driven by actual oil prices. And it's really exciting and fun because it's fairly new, and it takes a while to really get your head around this particular dynamic, but you're slowly getting to the point where your planter somewhere in Indonesia or Malaysia is also part of the global oil industry, right? And what impact will that have, right? So the assumption up until recently has been, well, okay, maybe it's not the best use of subsidies, but if we give out these subsidies to the planters of all sorts of crops, right? So like corn is the most egregious example in America, but soybeans and in Brazil and and obviously palm oil in Asia, will incentivize the use of these things for fuel. It'll make for cleaner fuel. And you have, like last year, for example, in an event of a price spike for oil, you can increase the proportion of the biofuels, and this will save a little bit of money, right? I mean, but what happens if the situation is reversed, right? I mean, what happens if there isn't enough biosources, and you have competition between calorie consumption and energy consumption, right? I mean, that I think is a fascinating dynamic that maybe is not on the forefront of every investor's mind, and nor should it be just yet, but it's something that should be there, right? I mean, remember it. Time people talk about what we do with the oil, right, and with the palm oil and the oil out of the ground, sort of thing, because we are getting to the point where it's almost a global market based on calorific value, and I find it very exciting.
Oh, I love this way where this is going. Calorific value. A lot of people don't think of it that way, right?
But it is exactly that. At the end of the day, like we're not there yet, right? I mean, this is somewhere we're going to, right? I mean, but we've made good steps along the way, right? And mostly through these diesel mandates, right? And biodiesel. So I am very interested to see in the environment of an El Nino where we expect lower yields, right? Who will take priority, right? I mean, are we feeding people or are we putting it in the cars, right? I mean, it's again, in an event of a average or below average El Nino, maybe this doesn't come up, right? I mean, maybe thing is fine and fabulous, phenomenal, high fives all around, right? But what if it does, right? And then if it doesn't come up this year, what about next? What about the next El Nino? And then we're being told that there is this crisis thing with the climate, right? And that the climate is getting more extreme. All right. Well, shouldn't that factor in to all our expectations, right? And what does that mean for pricing and relative position of various crops in this sort of energy/calorie cycle, right? And I think we are on the precipice of some very exciting times for the industry, right? Because of these dynamics.
Yeah. No, when you were talking about calorific value, I was just thinking, I don't know whether animal fat in terms of calorific value brings more. And just another angle. On your
sure,
point
but
about
for sure.
yeah. On your point about the reduction in terms of production and then diversion of policies to see whether you put it into the car or put it on the table. I think the MPOB just came out with an announcement on in May that they expect crude palm oil production for Malaysia to reduce by about 1 to 3 million tons. Now, as you said, it's very, very difficult to predict whether it will come, whether it's going to be a mild El Nino, then results going to be mild, or is it going to be a bad one that is going to be quite horrible. But in terms of navigating all these data sets, how should an investor position themselves, and maybe what are the anchor kind of data points that you look at? So do you will you sit down and look at MPOB production data on month and then compare that to the Indonesian guys, or how would you look at it in terms of trying to see how the impact of El Nino is going to be either a leading indicator or a coincidental indicator for you?
Well, if you are in Malaysia, you can just look out of the window, right? I mean, if it continues to be dry and hot, well, I mean, I'm sorry, but that's what you get, right? I mean, and in an environment that is dry and hot, you're not going to get very high productivity, right? I mean, unless you're able to get access to good irrigation, right? Outside of that, yeah, for sure. Thing to do is to look at production data, right? I mean, whatever production data you can get, try and aggregate it and see what's going on, right? The overall production for 2022 was around 77 million tons, right? Globally across all sources. If we lose 13 to 15% of that, we're talking what, 8-10 million tons of the table. If if Malaysian share of that is what, like 25 to 30%, right? So you're 2 to 3 million tons potentially of domestic Malaysian production, not 1.5. So as you watch out for what the ministry says, and as you look at the indications that the individual producers are giving you, and you look at the rate reductions, if there are any, right? I mean, because early, like with every cycle, right? I mean, there's always the argument to be made that this time is going to be different, right? I mean, this time is going to be severe or more severe, whatever, right? I mean, the differences can go either way. But point being, right? I mean, we have the historical averages, and given the number of times this has occurred in the data era, right? I mean, when we actually collect reliable data, right? All of a sudden, you're like, okay, well, data is lumpy, right? I mean, we only have these really 4 events that we really have good data for. Is this really indicative of anything, right? I mean, given the overall, whatever, thousands of years of cultivation of these things, right? I mean, are we working with a full data set? No, obviously not. So it's not this time is going to be different because four data points is not enough, right? And but nevertheless, those are the 4 data points that we have, and maybe they're actually quite average, and maybe they're actually pretty informative of what we can expect. And if that's the case, right? I mean, that's where we set our expectation. Now, of course, the technology changes over time. The way that people operate plantations changes over time. We understand better the needs of the plants themselves better. So over time, we can expect yield trend somewhat higher, right? I mean, not crazily high, but be more stably high, right? I mean, that we're able to compensate for the environment better over time, right? And so, all things considered, maybe 1.5 million decline is what we get in the end, and that's probably baked in the cake. But if it's anywhere closer to like 2.5 million, already you can start thinking about what impact does that have on the price. Something else to think about is, of course, the fact that the pricing for CPO palm oil is fairly elevated by recent history standards, right? I mean, now it has corrected quite a bit from the peak, but the peak was a little bit crazy last year, right? I mean, let's just
That's right. Yeah.
let's just establish that. So, with that in mind, um, what does it mean for the capacity of the price to go up, right? I mean, if the pricing is pretty high already, can we really squeeze it much further? I mean, possibly, but maybe that is also an anchor that will act to sort of dampen any of these moves. But these are the thoughts that a budding palm oil investor should have in his or her head when thinking about these things, because absolutely, no question about it, anything out of the ordinary that you experience on the outside will have an impact. Whether this impact is contained or outsized, remains to be determined, and we'll find out as we go. But basically, the primary data is what drives it, because you should see dips occurring on the monthly data charts, right? And for me personally, the indicator is always the price. If you see the price ticking up, that's an indication that people are concerned, right? And if they are concerned, they have a reason to be concerned. And even maybe somebody in India is seeing it, maybe somebody in China is seeing it, right? And it's, like I say, it's a global business, and the quarter of all palm oil goes to products of personal hygiene production. That global business, right? And then all these global players don't want to be left without the lovely palm oil that they put into your shampoo or whatever else, right?
Or your soap, or your,
all these things. So at some point they're like, well, okay, our input costs aren't a very high proportion of our overall expenditure, so we better secure the inputs, right? And because if we don't have the palm oil, we can't make it. So all of a sudden, that's the sort of thinking that could be occurring, right? And of course,
go ahead.
Yeah, I wanted to say that this ties in nicely with our earlier discussion on integrated versus specialized players, right?
That's right. Yes, I was just about to go there.
Yeah, because you're an integrated player, you can be absolutely sure that you know how much oil you're working with, how much fruit bunches you've collected, and how much kernels you've cleaned out, right? Whereas, of course, if you are reliant on third parties, even if they are Cargill, right? Even all of a sudden, you know that if you're a small mill, I mean, you're probably not dealing with Cargill, but whatever, your local trader might not prioritize you over some big guy who all of a sudden needs to supplement his volumes, right? I mean, if you're Wilmar, if your coverage is ordinarily you expect to be fully covered on fruit bunches, right? But you are only 95% covered, so you have to go to the market for 5%. And that 5% is a lot more than most normal people buy ever, right? So
exactly.
All of a sudden, there's a big player who is not very price sensitive, right? Because again, that's going to make that much of a difference for his cost structure, but it might for everybody else, right? And
that's right.
And in that environment, again, you see all that in the price, right? I mean, as you see pricing and volume start moving, you're like, okay, something is going on. And then again, if it's still hot and dry, that might be the reason why.
Yeah. No, excellent points. I'm just going to wind a little bit back for the benefit of the audience. So, Leo just mentioned something very, very important about who these consumers are. So, don't talk about just geographically based on countries, but in terms of who are the 25% goes to, personal care. So, guys, these are people. These are companies like Unilever, the Mondelez Group, P&G, Ferrero Rocher, Friesland Campina, all the big brand names that, you want your toothpaste, but hello, there's palm oil in there, You want your Ferrero, a favorite Ferrero spread, that's the only oil that can maintain at room temperature, that can keep your favorite.
Exactly. Yeah, we all like the fact that you can forget your Nutella or whatever on the table, and then it's still going to be all right in the morning. It's not going to separate.
Yeah, exactly. That's far more for you, right? So that's great. So now moving towards the planters, I think something that you mentioned much earlier about irrigation, and one of the biggest. I was interviewing an agricultural technology guy.
I've seen
you watched that, right? Yeah, great. So he talked about a lot of these planters, there's still inefficiencies in the production operations of all this. Like, for example, how do you know whether the guy actually fertilizes if it's manual? You know, it's just like a logbook and you're going to track, right? But here comes the bigger play and the bigger question that I wanted to ask your thoughts about. You said that you can't have like I'm assuming you can't have like a super fertilizer that compensates for your lack of irrigation. Or is that true? You know, in a way, no, you can't, right? So in a way, irrigation remains key. And if that is true, is there a way for investors to actually find out who are the best operationally efficient guys? I mean, do they have to actually like fly a drone across? Do they have like or is there any other secondary inferred data that they can, you say, hey, these guys actually irrigate well, like you said, the Sabah and Sarawak guys, plenty of water. So how do you access all this actually, especially the planters?
Well, so I would 3 points, right? Number one, market is pretty efficient, all right? I mean, you can look at the relative valuations of these things, and you will note people trade at a premium to some other people, and that is reflective of a bunch of things. One of them is adhering to a bunch of standards. So, of the standards that has been sort of has been making its way through is sustainable palm oil cultivation technique, right? All the big guys are much further along at rubber stamping their plantations than small guys, right? And that is indicative of all sorts of other modern techniques, right? I mean, in terms of irrigation is, I say it's super important, but plantation managers tend to not think about it quite in the same way. No, everybody understands its importance, but because it's so obvious, it tends to be like a thing of its own. So when we're talking about automation and we talk about processes design, it tends to be focused on picking of the fruit and delivering pesticides and obviously for fertilizer, right? There is absolutely a change in the slope of the curve of efficiency and efficacy of fertilizer, right? There's only so much you can put in the ground in any one year, and you should probably rotate between types of fertilizer, right? So
the NPKs, right? NPKs of this world.
Yeah, so you put in the full NPK bag year one, maybe go easier on the N next year, and then focus on the K, and then maybe the reverse the year after. Make sure that the ground is being fed a good diet of all these things, right? And then take some pauses. Sometimes you take a pause year, right, and don't put too much in, right? I mean, that's also for the benefit of the fertility of the soil, right? Now, again, I'm saying all these things, and I'm not an operator, right? I mean, it's actually much more detailed. It's much more scientific than just, well, let's just do this, right? They all do see the reaction of the plants. The thing about that, though, is that it's not a static process, right? I mean, so like as a background, right? I mean, obviously it takes about 7 years to get a palm oil plant to production, right? It takes 1 to 4 years, you don't expect anything. 4 to 7 years, you get sproutings here and there, but it's basically small and not particularly good. 7 years to about 12, that's your peak production. 12 to 18, you can kind of, well, I mean, 12 to 15, you still go on and it's fine. 15 to 18, the decline sets in and it's really quite noticeable. And then it's sunsetting, right? And then you probably need to replant. Some people run it all the way through to 25 years, like Golden Agriculture of Singapore. They're well known for running their plantations into real old age, right? But then on average, like this understanding of the age curve really took place during my time as sort of an active sort of analyst, and I've seen people adopt this data much more readily, right? I mean, the age of plants was being made available to people, but both in terms of average, right? I mean, the snapshots that the palm oil planters were expected to provide has evolved to the point that point has become key, because everybody knows have that sweet spot, right? You will have higher production. Now, if your plants are too young, well, that means you'll have this spike later on. For free, you will just get a lot more fruits from the same acreage, right? And then if your plantations are old, well, you're going to see disappointment over time, right? And that has now that's established. Everybody knows that. That's very much part and parcel, right? With fertilizer, I think we're kind of sort of starting to get there. As in, like, we now all understand that you have to have the rotation of fertilizer, you have to have different mixes of fertilizer, and maybe they have to be different during different stages of development of the plant because the needs are slightly different, and all these things tend to be quite individual, and obviously the bigger guys have bigger R&D budgets, so they have the time, the space, and the money to really play around with this and map it out, see what's what, right? Whereas smaller planters rely on individuals more like, and you talk to some of the plantation managers, they know it a lot better, right? They look at you like, I know what my things need. I named them all. I've known them since they were babies, right? I know that this, that. Yeah, okay. How can we institutionalize this? How can we create data sets around this? And the answer is you can't unless there's buy-in. And this is, I think Wilson was talking about this on the other pod, right? That people administering the fertilizer, they're optimizing for a slightly different thing. They're optimizing for their own personal well-being and how they get money and how they feel about stuff. Whereas, of course, you need to be fully cognizant of the exact amounts you put in, map them out, put it in the spreadsheet, make sure that you know exactly what the outcome is. And the fact that these random variables of, people stealing effectively, being incorporated into all of this, it disadvantages the players that do not have the monitoring techniques that the big guys
precisely
have, right?
Yeah, precisely.
And so to come back to your original question, sorry that this ended up being
no worries.
But yes, water is super important, but on the pantheon of things that we can automate and figure out, we can do the sprinkling, right, and water delivery and all that stuff, which is very, very good, and most people do it, but it's not something they aggressively monitor quite so closely. I think the fertilizer mix that is really sort of high up on the technologization agenda or the industry. But of course, if we go into drought mode, of course, water will become much more important, right? And all of a sudden, you can't rain, and you have to figure out what you're doing. And then there's a question of how the water impacts the entire, the whole water table, right? I mean, what happens to, right? Because it's not just you; everybody draws more water all of a sudden.
Yeah.
And then, so all of this, agriculture is complicated, right? It's low fee, low yield, and really complicated. So just
high labor practices, hard to find workers, a lot of these things.
And the fact that it is so labor intensive still, I think maybe escaped some people, right? I think I mentioned this before. I mean, if you go to a plantation, expect actual people walking around, putting out fertilizer and chopping down trees, right? I mean, it's literally that, right? And it's probably going to be for a while. We're not at drones stage yet.
We have drones serving us burgers, but no drones to, not yet drones to actually cut or trim palm oil kernel yet. You see that's where it's surprising. You've got show robots, dancing robots, but no one has built a proper robot to actually trim palm oil, fresh fruit branches, and all that. There is effort, but that's where it's very interesting that you brought up this point about that incentivization to automate, because it is lucrative in a way. It is lucrative, but what do you think are the bottlenecks in that pushback on the advancements of all this?
Well, now I don't want to sound obnoxious or whatever, but I think in every industry, and the more primary the industry, the more you see of it, the pushback against technology has historically been very high, right? I mean, you always had, people challenging technology because it's going to take away their job, take away the job security, impact negative, right? So I think it's very basic, right? I mean, people don't want to be substituted by things. And also the uncertainty of it all, right? I mean, what's it going to look like after this? So you marry that with cost, and for a lot of smaller operators, it's just, okay, well, there's a lot of institutional pushback, right? I mean, everyone seems to be super keen for it not to happen. They'll sabotage it. A friend of mine used to operate a farm in Russia. and he bought a couple of these new John Deere tractors. You know, the ones that operate based on satellite positioning, and
Ah,
they're driverless and all that stuff. Well, they operated for about 5 days a month because the locals figured out a way how to make the engine stop working in such a way that you'd have to trip them out for maintenance a lot more frequently than normal, because they figured, well, if these things come in, we're no longer needed. So we must do everything in our power to make sure that these things do not become useful, right? And so
wow.
the entirety of the collective farm, or former collective farm, now a proper farm, they spend their days figuring out how to sabotage all these innovations, right? And because of the command structure in place, there was no signals being sent up that this is what's happening, right? And like the local this was
Mm.
contained, and they were dishing out punishments, and they were yelling at people who were being caught sabotaging. But because it was like a village-wide effort, effectively, there was no way any technologization was going to succeed in that environment, right? So they had to go back, they had to redraw plans and explain to the locals, and kind of walk them through the thought process. And it's not like either you or the machines, and the machines are not going to take your jobs, right? I mean, this is not supposed to be. And so after the outage effort, they were actually able to move over to John Deere quite well. But it's just like these are deep, like with agriculture, there are deep-seated concerns, like over time. And like,
Mm.
I think there is this notion that people in agriculture love technology because it makes their life easier, right? And it is true to an extent, right? Some obvious technological improvements, absolutely. But as you move away from an individual person being a particular task to a person worrying about his usefulness within the context of that organization, right? I mean, first he's very happy about being able to drill holes easier, and then he's like,
Mm.
oh no, drill holes, what am I going to do? I'm the hole driller, right? And then the fact that you can actually evolve within the organization, the fact that your personal position within the organization can change, and actually you can end up earning more money if you know how to use these tools better, right? I mean, that is a second, third, fourth order thinking that
Thinking.
is obvious to every participant.
Yeah.
And so I feel like the lack of buy-in, like across the sort of the lower tiers of regional organization, is the biggest deterrent, right? And the cost,
Mm.
obviously.
Yeah, but also it also highlights the human ingenuity that they actually were they actually had the capability to figure out how to sabotage it, because it's quite a complicated machine sometimes, so it's like
Well, yeah, yes and no, because absolutely it's a complicated machine, but the heart of it is still a big diesel engine. So
yeah,
you just
just
got to know,
stab the heart.
well, or spike the fuel or whatever,
Yeah,
right? And
whatever, right? Yeah. Human
when
ingenuity.
and like these communities that are based around these farms, right? They're the local guys. So there is no way that the corporate center, no matter whether it's Russia or Malaysia or Africa or Latin America, these people live there, right? And if
Mm,
you decided not to accept something that you brought in, there is very little you can do, right? I
yeah.
mean, you can probably go there and send like enforcement units, right? That will stand there and make sure that people follow the instructions. But even then, it'll still somehow fail because these people are off that land, Boomi,
Mm,
and they will figure out a way to deal with this, right? To really not let it happen. So this notion, and I think for a lot of like, especially older school management guys, this notion that you have to get people on board, not through force or command, but like selling them on this idea is quite new.
mm.
Right? It's
Yes,
not,
that's right.
I mean, yeah, I don't suppose it's just new in Malaysia. It's quite new in agriculture overall because, like, people tended to treat labor as replaceable, and then until it's not, kind of thing, right? And the
Yeah.
more labor something is, the more localized something is, the more you have to be mindful of all these things. Um, yeah, I think the long and short of it is the technological adoption is not going to be a clean, smooth curve, right?
Yes.
And
It's not going to be
give
hockey stick. It's not going to be a
no,
hockey stick.
it's not going to be a hockey stick. And another thing that is, has to be something that people need to think about is that technologies that genuinely give you like a big cost advantage will be adopted, right? If there is
Mm,
a new seed, if there's a new fertilizer, right? I mean, these things will come in. But it's these incremental labor-saving technologies that will struggle the most. And they are potentially interesting ones, right? I mean, because they might not give you immediate yield on that first adoption, but as, for example, if you fully automate a farm, all of a sudden, like, you can do all sorts of interesting things about managing like sunlight, or understanding like what grows where, like mapping it out and making sure, even like the fertilizer delivery thing that we talked about, right? I mean, all of a sudden, all of it becomes super reliable and super cool, but the benefits only accrue after a certain degree of integration, right? And that that takes a while to get there. But because you're not seeing those immediate improvements on sort of on the first couple of units, it's very easy for people around you to say, not worth it, right? I mean, I'm not going to bother. And it's the long game that people like Wilmar, and again, coming back, bringing it back to our talk about integration, if you are a fully integrated player, if you do control the full value chain, you may see the benefits maybe more so, because you can really monitor every aspect of your business. But also, you can really then exert control and explain to people why it's imperative that we have all these dynamic reporting, for example, systems in place, right? Things like that, that we have a really good read on everything we're doing. And in order to have those systems, we need these sensors. And in order to have these sensors, it'd be nice if, you all could do this, that, and the other. And by the way, you are part of the Wilmar family, so nothing is happening to you, but this is what you need to do now. So you can see organization for a more sort of organization that is not just about growing stuff, right? That is like a full channel sort of wide organization. It's much easier, well, maybe not easier, but maybe it makes more sense for them to implement these things, and then also to accrue benefits of these implementations over time and over different business units.
Yeah, because it's much more within their control, and also like what you said about family. I'm going to go into probably now the 10,000 feet and probably use this as a good conclusion. So you obviously studied both the Malaysian and Indonesian, contribute 85% of the global palm oil. What are the quality? You can start with names, but maybe you can start also with the criteria. What are the qualities of great, especially publicly listed companies, that you look at that has translated into obviously top line growth, better return on invested capital? What are the qualities and similarities that you see? And perhaps if you're fine, can mention some names. Obviously, Wilmar is definitely one of them. But in terms of maybe the second tier planters, integrated players, what are things you see actually?
Well, I will start with a more generic statement, right? That overall, palm oil industry as a whole has done a pretty terrible job over the past 10 years of promoting itself. And if you look at prices for these planters, whether big Malaysian names or small Malaysian names or Singapore or Indonesia, they're all kind of haven't moved in 10, 12, 15 years for some of them, right? I mean, I remember buying Golden Agri in 2012 and it was at like 50 to 60 cent a share space. Now it's 24, right? 25, 26, that sort of range, right? So it got cut in half over 12 years, right? That's not what you. I mean, I think as you look at the performance of these things, you're like, wow, they haven't done anything, right? And the real standout here is Wilmar again, because they were actually able to create value through through spinning out parts of their business into separate listings, like the Chinese business, like the Indian business, and that is well noted. And Wilmar is structurally pretty well positioned. But if you look at, some return metrics like the ROE, for example, which is the one that I like, and, I know all the shortcomings, but I still like ROE because it's easily available, easily calculable, and it's imperfect. It's a good enough proxy for the underlying quality of business, right? And I mean, maybe we want to split out some of the debt dynamics there, but because at this point in time there isn't that much debt out. So again, Wilmar is by far and away the biggest issuer of debt in the space, right? So Wilmar, there's not that much debt in the industry. So some, of course, but like not to the extent where it's a big concern, right? So I think that leaves us fairly sort of
just maybe one company that I definitely need. This company really caught me by surprise. I didn't know they had such a deep and rich history in Malaysia, but I cannot not mention their name in this podcast, which is United Plantations.
UP.
So Niels Beck family, Nielsen Beck's family. I mean, Danish company and all that. I think they're very transparent in their disclosure of their yields, the FFB yields, the kernel yields, and all that. What really surprised me was actually they even have a train system within their plantation, and I think it's one of the first. So if we look at that, and their RSPO is compliance is absolutely biodiversity and all that. So is it because of maybe the question I will form is this: is it because of a great management that they are where they are? Because there's a lot of guys that can emulate them, but they're not choosing not to.
But come back to the conversation we literally just had. If you implement the rail line on your plantations, what about the drivers of all those mini trucks that they use to collect all? Right, and then all these guys who are super comfortable and who are married to the sons of the truck driver, right? I mean, like all of creating this buying thing. I know it sounds really obvious and stupid. Like, how can you possibly, compare? There's such efficiencies to be had from this. Well, what are the efficiencies, right? I mean, let's calculate, because you can use your own oil for diesel, right? I mean, mix it yourself, kind of thing, right? I mean, or whatever, but it runs, right? And you can also fix the trucks yourself, so like the cost of maintaining the trucks, right, isn't very high, right? So you really have to have like a strong top-down view of where you want the business to go to in order to allocate money to something like like a railroad. And also, like, the flatter the plantation, the less the propulsion is easier on flat.
Correct.
It is up and down hill. Right?
No terrain. No difficult terrain to go through.
Yeah, and of course, like, you have to have a degree of flatness to grow palm oil, full stop, because they don't really do like hills, right? I mean, they do whatever. So in that environment, as you have to solve more complicated transportation questions, you're more incentivized to figure something out. But again, outside the window in Malaysia, it's not super hilly, right? I mean, it's not super mountainous, right? It's actually quite mild. So again, the question is, at what point does it make sense for these guys to start implementing these big, large-scale infrastructure solutions? Right? And there are cases, right? And like, think about how it's laid out and where the centers of thing are. Like, once you've taken all of it into account, then you can really start arriving at the ROI of a particular thing, right? Like the rail line. And I'm certain that the bigger players, for sure, are still looking at this and something that they're considering. But the question is, what's the payout? I think the other thing, talking about them purely as public companies, what happened to IOI property? What happened to Kipon property, right? They've been spun out, haven't they? Right? And all of a sudden, that upside, because the thing that juiced their ROI for a while was the ability to turn and create this mid-valley mall or like IOI mall, like whatever.
Correct.
Right? The ability to create these things was like effectively free money. And this is why I started, when we were talking, right? The land business, like, it seems trivial, right? But it's actually not, right? I mean, if you own your land, you can do stuff with it, right? I mean, which may or may not be growing stuff, right? I mean, and eventually you might want to seize the growing thing and do something else with it, like build a mall, right? Or a university or whatever, right? And we are not at a stage where it's a huge concern, right? Because I think that's more one-off for a lot of these guys, right? I mean, anything to do with the growth of the capital central region, right? I mean, it's probably not going to grow in quite as fast as up to date, but nevertheless, it's something to bear in mind that something that used to spice up the ROEs was the property development business. Now it's no longer there, and it's not there for a while, but we are left with just the raw agricultural business, right? In most of these names, and I think that that is the takeaway, right? Who of these guys is able to make good ROE purely from the operational dynamics? This is what I would look at. Now, my thesis for Wilmar in 2018-19 has been, as you spin out YKA in China, that business is on substantially higher multiples, calls. People are willing to pay 30, 40 times earnings for a high growth, high quality China, of which thirdly will be the big one, right? Now, that is not repeatable for most of these guys, right? I mean, that's the one that yielded the revaluation that we have in Wilmar from like the $2 range to like the $4 range, right? And well done, everybody involved. Great strategy, great thinking, results. What about now? Like looking at the producers now, what's left in them? Who is doing the best that they can? And what are we paying for it, right?
Yeah.
And I think the large Malaysian names, again, the Sime Darbys, the ROIs, the KL Kipongs of the world stand out because if you look at multiples, they are at the very top of the list, right? So I'm looking at Sime Darby now, looking at almost 94 times 25 earnings. So earnings and 19 times 3, you know, for effective commoditized business. You look at Wilmar at the same time. Wilmar is at 9 times, right? It's a big difference.
It's a big difference.
It's a big difference. And then you look at SOP guys, Sarawak Oil Palms, they're at 7.5, right? And all of a sudden you're like, okay, well, are there reasons for that? Yes. And they tend to be non-operational, right? I mean, the big Malaysian guys are you know, they're more integrated into the Malaysian business circles, right? I mean, they're more they're members of the indices. They're members of various lists of companies that, you know, the people should own, and like Malaysian local business success stories, that sort of thing, right? And all of a sudden, you know, that puts you in a position to be trading at these elevated multiples. But as an foreigner, you look at IOI and you say, yeah, okay, it's good. It's a perfectly fine business, right? I mean, it's I like it. There is nothing wrong with it. But look, it's the 10% ROE at best, right? Okay, well, I mean, you know, during the really high period of palm oil pricing, it's probably at 20. Normalized, probably closer to 10, right? Okay, well, is it really a good deal for me to be buying it at 19 times earnings? I mean, to each his own, but as far for me, I think that it's a bit challenging, right?
Yeah.
Whereas, of course, you look at something like SOP, right, with their growth profile, with the things they were able to achieve over the past couple of years, you're like, huh, at least with these guys, I can see what they're doing. Like, at what point will they be realized? You know, because they're also integrating slowly, but, you know, they're increasing the share of their own products sort of being sold directly to consumers, all that stuff, right? These are good dynamics. You're like, okay, fine, I like that, but I'm surprised that it's still so cheap, right? And then, okay, fine. Then maybe that's the opportunity. Like, look for things that look cheap to you for whatever reason. The one thing I will note, though, that I think all the Malaysian players have done really, really well in 2022 was to trade up and down with the price of palm oil. So you know getting what you're paying for, right? I mean, if it is palm oil that you want to get exposure to, well, Malaysian players have got your back, right? I mean, like... again, I'm going to continue using SOP as an example because it's the company that I know quite well and I've been following for a while, but other plantators are available, right? And I think it's a good generalization for the lot of them, which is by no means an endorsement on my part, right? I mean, everybody should do their own research and by all means...
That's right. On due diligence, please. Do your own homework.
Do your own homework. Yes, none of this is advice, but if you look at what happened in 2022, I think the best part of it for most of these guys, and of course SOP in particular, has been that they went up with the price of palm oil and then went down with the price. So you're in effect exposed to what you're trying to be exposed to. It's not the corporate restructuring story. It's not the management improvement story. It's none of that, right? It's very straightforward. You think palm oil is going to go up because of the weather conditions or because of some other conditions or because of demand growth? Well, SOP gives you exposure to that, right? And it tracks nicely.
Mm.
In my numbers, they have the highest correlation with the underlying price of palm oil compared to Indonesian or Malaysian producers. So that, to me, is something to bear in mind. The question is, if you're buying Wilmar, you're buying a very good company that is fully integrated. So in case there is a squeeze in palm oil, it's unlikely to impact their business positively or negatively too much, right? Because they're not too much benefit from the rising cost of palm oil, because they're not going to be selling a lot of fresh fruit and squeezed oil, right? I mean, they're likely to be selling the finished products, and the degree to which they can pass on the cost to the consumer is not always clear, right? I mean, they probably, but you know. So it's not a surprise, therefore, that their correlation with the palm oil price is the lowest amongst producers, because integration tends to mean lack of pass-through, right? I mean, or at least immediately, right? I mean, longer-term benefits as opposed to short-term spikes, right? Whereas individual growers of whatever nation or whatever company that you prefer will have that exposure, right? And then the downside of the Indonesian names, for me, has been the policy of the Indonesian government. And looking at it, I'm like, well, you know what? London Sumatra, great company, doing good things, not going to touch it on account of Indonesian government. Tunas Baro, good things, like highest ROE in the sector, good growth prospect, but is it sufficiently better than everybody else in terms of perspectivity that I can just close my eyes and forget about the Indonesia factor, right? I mean, maybe, maybe not. And it's a decision that any investor can make on his or her own time, but it's just something to think about.
Yeah. I think that was actually a very good kind of frame or thought process or methodology of how you should look the correlation between planters directly to crude palm oil prices, integrated players against cost pass-through mechanisms. And probably I want to end this podcast with one final question. How do you know, I know it's not going to be easy, but whenever there's this cycle happening, right, how do you anchor yourself again, just to conclude the podcast? What are the data points, obviously you mentioned one earlier was the price starts going up, because it's a leading indicator, there's traders going to see all that. But let's just say secondary data of how you're going to anchor yourself as an investor. That means we know that planters, by and large, per hectare is about 2,000 ringgit in terms of cost. So anything above that, it's like pure profit, right? So once the cycle happens, I think that was what largely you're trying to say, but besides that, any other anchor points to give insights to the investors?
I think a lot of people will challenge, well, not challenge, but like this 2,000 ringgit a hectare thing. Yeah, it's a good shorthand, but it's actually literally anything that any of these people would actually say that the costs are. As usual, right? Average is the best data point, but is also the least productive one for every individual company discussion, right? Which is kind of why I've avoided using these like generic numbers earlier, because I think the average is about 2,100, right? I mean, that's the number I'm using, but actually on individual level, you do have a spread within those numbers. But like I think as long as you're over 2,500 ringgit, right? I mean, you're covering costs for pretty much every Malaysian participant. That's my
rule of thumb,
but I think with the El Nino or anything else matter, you got to understand you are dealing with a narrative, right? I mean, you've created this narrative of shortness of supply, of bad weather leading to that shortness of supply, and higher prices that will outpace the demand, the production declines, right? So the thesis is that even if your guys aren't very good at growing in this environment, the pricing is going to be so dramatically stronger that you'll be compensated for it either way. And also there's probably some stocks they can sell or whatever, but basically their business prospectivity has improved dramatically because of that in 2H23 and maybe throughout 24. You got to check that at every possible angle. Now, first, higher prices for palm oil finished goods going up in the store, Because if they're not, well, okay, where's the extra money going to come from, right? Are you seeing the data, right? I mean, on the monthly data that you get in Malaysia, or quarterly, whatever data you can get your hands on, right? I mean, are you seeing what you're expecting to see, right? And there are two approaches here, because when you're not, well, it's coming. Yeah, okay, but if you're not seeing it in the data, or as you go through the year, at what point do you change your mind? And I think this is very important that every investor has to learn for his or herself, because the prevalence of narratives around these days is such that it's very easy to buy into. And I think our human minds are rewired to receive these narratives and take them as our own, right? I mean, I think last year, the strong oil case, for example, right? I mean, we were all there saying how high it's going to go and what the differences are, right? And I was guilty of that as much as the next man, right? And understanding the underlying dynamics is very important. And then you look at the core data points that will impact this, right? And what are they? And I think the pricing is really important, because the price is always telling you something. If the price is going you continuously, and even if the underlying story hasn't really changed, but the price doesn't go your way, take a step back. Think of why it is, because markets are actually pretty damn efficient, right? I mean, not without a fault, right? But the markets tend to see through most of these things, and they're seeing quite often more than you can, because it's an aggregate of all willing participants, right? So
that's right.
Even if maybe you don't understand the rationale, the impact of the rationale will be felt on the price, right? So it's important to check the price, right? I mean, now when the price starts going your way, great, fantastic, high fives all around. Now check why, right? But also after the price, check all the underlying things. If the price is going up, but also the volumes aren't dropping off, how sustainable is that increase, right? I mean, maybe the decisions have been made to buy in order to draft. But if the draft is coming, well, then maybe those increases are not very sustainable. And in fact, this price action and volume action is just indicative of people buying in advance. And maybe the reflection will be less volumes in the first half of next year, right? And things of that nature. Now, it's not always easy to strip these things out. It's much easier to take the sort of, price dynamic for a full year and then figure out what happened where, right? I mean, when you know. But
that's right.
Which is why I'm kind of indexing on the price, because that, in terms of information that goes into it, the pricing is the most complete set in a way, right? And I mean, because everybody tends to go into it to figure it out. Now again, you have to strip out things like government action, if there are releases from storage from the government, or they're buying back instead, right? I mean, all these things, they factor into it, and they do create short-term dislocations, and you have to be mindful of that. But nevertheless, watch out for every data point you can get your hands on. Does it fit in your narrative? And if it doesn't, discard it away and say, it's whatever, we'll figure it out, right? Make sure that you stress test your narrative against the data that is being presented to you.
Got it. Leo, again, absolute pleasure. I don't want to be between you and your and lunch over in London. I'm looking forward to the next one, which I want to talk a little bit about precious metals, because it's something that I think something up your alley as well. Let's schedule a time. To the listeners out there, I hope you've gained great insights from Leo as much as I have. If you like content like this, subscribe to the channel, give it a like. Definitely the YouTube algorithm will help spread the word. And Leo, thank you again so much for your time. I'm looking forward to seeing you in the next episode.
I love these chats of ours. All right.
Yeah.